Today is Bobby Touran, a serial entrepreneur and the CEO and co-founder of Rainbow, which is an insurtech company that is reinventing the way restaurants buy insurance. But I can tell that he's not going to just stop at restaurants, so we'll get into that in a moment. At least I don't think he will. Who knows? I should also say that I met Bobby many years ago. If you're a listener of this podcast, you'll recognize the last name Touran because I had his brother on not so long ago, Kayvon, who's also a founder of another company. So certainly an impressive siblings, so to speak, and people that I've grown to respect and know over the years. And I'm happy to do another full circle interview with a Touran. Bobby, welcome to the Goats of Growth.
Thanks for having me, Jay. Yeah, I was just thinking that I've probably known you for more than 10 years now.
Yeah, it's true. Yeah, I think I looked earlier to see when we first connected on LinkedIn. It was 2011, I believe. So yeah, and we probably obviously engaged certainly before that because I had started my company in 2011, and I think we met actually at the company that I previously worked at, American
Right.
Personnel. So that, and I left there in 2010. So there you go. So, anyways, welcome. Thanks for doing this. Um, Let me just start with a question I don't typically ask, but I am, like I said before we hit record, I was saying that you just fascinate me. Just from the beginning, I just felt like I could describe you as an old soul, I guess, if you will, when you weren't so old, and you're not so old now, but you were certainly much younger back then. So the question is, give me the backstory. Like, what was your upbringing like? Who were you as a kid, and then who were your influences early on in life?
Yeah, so I grew up southwest of Boston in a town called Westwood. And I think I had a pretty normal upbringing, have two wonderful parents. I have a so brother who I know you know. Um, but yeah, I think pretty normal. We all went to public school our whole lives. I went to college actually in Canada, in Montreal. Really just wanted to go away from Boston and sort of explore a little bit, and fell in love with a school up there. And then after college, returned back to the Boston area. It was 2008, and I'd studied finance, and not a great time to go into finance in 2008. So as I was thinking about things to do, I started a little business and got a feel for what that was like. Prior to that point, I'd never really done anything like that. So kind of the blessing of the unknown kind of like just kind of kept me going, and it was exciting and it was engaging work. And one thing kind of led to another, man. As somebody much smarter than me once said, when you don't have a plan, everything can kind of feel like progress. And I didn't really have a plan, and I just kind of kept trying to put one foot in front of the other. And not long after that is when I sort of met you. And then yeah, and so I'm here today. Now I live in California, and happy to sort of talk more about the journey. And in terms of influences and role models growing up, my parents definitely had a huge role on that. My mom was a small business owner for many years. Both of them were incredibly loving and supporting. And now, as I'm starting my own family, I can appreciate all the things that they tried to help me and Kayvon with. Um, and then, yeah, just after college, was always interested in business people in general. Never really had a, 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 a track to go into sort of more of like a professional services type role. Always just loved building things and sort of being accountable to myself. And it's got me to where I am today.
Yeah, and that's the thing. That's what I was looking for too, as well. Was like, where did you get the entrepreneurial bug or the influence for that? But it sounds like your mom, she was a small business owner, so that was part of it as well. And you mentioned that you always like building things, and obviously, when you're building a business, that is certainly a thing to build.
Yeah, exactly. Yeah, that's right.
So tell me about this new venture, Rainbow, and how you got there. In other words, let me ask it another way. What were you doing before you founded Rainbow, and why Rainbow in particular as a venture?
So in 2008, when I moved back to Boston, I was just starting to learn about startups.
Mm,
Um, Not something I'd ever really thought about at all up until that point. Never really thought about it in college. Um, But in the Boston area at that time, like shortly after I moved back, Mass Challenge started to become a thing, and I was hearing about all these folks, coming up with these companies with, you know, funny sounding, memorable names, and they were using software in these like otherwise kind of like stodgy industries. And at that time, Boston has this incredible legacy as like a venture ecosystem, but I always thought of it as more of like biotech and a lot of like B2B software. And it was like by a lot of like more established founders who had already been founders or who went to great schools like MIT or Harvard. And I was like exactly zero of all those things. And so it was just cool to see that like people who weren't exactly like that were able to starting companies. And that's sort of like what got me curious.
Hmm.
I'd always sort of like, if you think about like what a startup founder does, like I've always been most interested in like the sales and business development side as well as like the development of the product, using those two things together, like learning things from the market and then building a better mousetrap. And that's how you and I got connected because I was thinking about sales roles at tech companies, right? And have been involved with starting a few different ventures, all having to do, with software development in one way or another, and then moved to the San Francisco area in 2017 to join an incubator, which I'd never really done until that point. And the company I started was it was in insurance. I started it with two other folks, and we started it because we thought it was like interesting, a very big industry, very important industry, provides a meaningful service to people, and then yeah, after several years of sort of running that business, had really fallen in love with like insurance more specifically, and wanted to start something new from the ground up, and so started Rainbow in 2022 with two other people, and so that's what I run today.
I don't think I've ever heard anybody say they've fallen in love with insurance, so that's definitely a first for sure. For
Well,
sure.
and not only is that's probably fair, but also I feel like the majority of the people I know who are in insurance had family members that were in insurance,
Hmm.
and they were exposed to sort of the lifestyle of the industry, which is a great lifestyle.
Hmm.
And so for me, I guess in a way, I think of this second venture in insurance as like, I had the previous experience, so that sort of like, gave me the guidance to start this one. But yeah, I just love it because it's like I think there's all these misconceptions about insurance. By the way, everything that I'm talking about is like property and casualty or commercial insurance. So I literally know nothing about life insurance or health insurance, but
Hmm.
insurance is like very dynamic. It's changing all the time. The work is never done, so to speak. It's really all about people. So you get to build these great relationships, which sort of fits my like desire to be thinking about sales really nicely. It's just a lot of good, hardworking people, honestly. And the thing that I really love about it, especially, is just that the product is a good product. It protects people. It helps them when bad things happen to them, and it's super super critical here in the United States.
I want to get more into that in a moment, but I want to back up for a second. Incubator. Tell me about that for people who don't know. Maybe someone who's listening who wants to take the same path and get into an incubator. What was the process there? Did you have to apply? I assume. Just walk me through what that looked like, and what do you do once you're in there?
So I think there are so many different flavors of incubator. The one that I joined because somebody who I had worked with previously, prior to joining the incubator, had actually moved to California and was effectively running that incubator day to day. He's someone who I knew, and he was my co-founder of the company. And he was like, you're a founder, you have that background, you have that like that DNA. Would you think about like coming out here and maybe we could build something together? And at the time, I was at a different role in New York City, and liked what I was doing, but that just sounded like an interesting opportunity that I'd not really been presented before, and so I just sort of like jumped at the opportunity. Our incubator that we were part of really only focused on starting a couple companies a year in a very focused way. So some other programs, they'll have like cohorts of 5, 10, 15, 20, or more companies come in at once. It's like a couple month long process, and then you spin out into the real world. Ours was they only incubate like 3 or 4 companies per year. All of them more or less have to do with innovation and financial services. You're incubated for 6 months, and then you spin out. So it was a great experience for me. You're around a lot of other startup people. One of the hard things about for me, especially at the beginning of my journey, was I was super excited about what I was doing, and I just felt like pretty much anyone I would talk to had just like no way to contextualize what I was talking about. They're like,
Mm.
what do you mean? Like, doesn't that make you go crazy? Aren't you super stressed all the time? And I was like, well, no, I love what I'm doing. It doesn't feel stressful. And when you're in these environments, it's just really helpful to be around other people who have made lots of mistakes, but also been successful, who can just sort of like give you encouragement. And so that was huge.
When you're incubating, so to speak, or is it really where you're, because I can hear where the stress might come from that people are asking. In other words, you're showing up every day. Maybe you have an idea, maybe you don't have an idea, but you need to be thinking of an idea, and then maybe thinking of a lot of ideas, and then trying to basically figure out which one you're going to put all your energy and effort and resources into. Is that fair to say? Why not? Or do you already
So
have an idea?
in my experience and with this company, there was a little bit of that at first, like figuring out, like you said, where to make the leap. But I
Yeah,
think that for some founders, the thing that's like kind of non-obvious about startups is that no one's first idea is a good idea, like
right.
just generally. It's pretty rare. So I think one thing that's important to keep in mind if you're listening and you want to be a founder is whatever idea you start with is almost certainly going to change, and it might change dramatically.
Right.
Um, and that's not only okay, like that's a good thing, because if it's changing, it's probably because you're getting feedback and you're being open-minded enough to respond to it and to evolve with it, right?
Mm-hmm.
Um, so that's really the key, right? Like, and but the thing that is really tricky about that is that as you're getting feedback, how do you really know what's the right thing to listen to? You're all
Right.
in, you're super stressed, you might be like maxing out your credit cards to get this idea off the ground. All your loved ones are like, you're crazy, why are you doing this?
Right.
That just creates like an environment where it's hard to make rational decisions.
Mm-hmm.
Um, so being around people who can kind of help you discern, true signal from just like noise that you're hearing is really important. People who can tell you inevitably some of the paths you choose to go down will be the wrong ones. Having someone there to say, hey, it's okay, like we can move away from this, you can keep going, that's
Mm-hmm.
really important. You just kind of have to keep doing that until you find something that works, and then the hard work begins, unfortunately.
Yeah, once you find the idea, now you have to execute, right? You have that
Yeah,
vision, and then it's
yeah.
the strategy and the execution. You mentioned maxing out credit cards, which brings to mind another question, which was, as you're in this incubator, like, is the incubator funding it some way? Do they write you a check early on? To be like, what does that look like functionally, logistically?
So again, I think there are like a lot of different models, but the one that I was in, you get a stipend to basically like pay your own bills
Mm-hmm.
while you're out there focusing on this thing, and then you would have like a discretionary budget, and that budget is like effectively like an investment. You can use it however you want. You can buy laptops. You can, if you need to go out into the field and talk to people, you can pay for the plane tickets and whatever you have to do.
Mm-hmm.
Um, and so, yeah, that they do support the business financially. At least this one does.
Got it. And just so I understand, I'm looking at your LinkedIn profile here. I'm trying to figure out the timeline. Was that which incubator was that? Was that Wasabi
Angel,
Ventures?
no, so Wasabi Ventures was or is a venture angel investment firm that also does a lot of incubating of ideas. They were actually, so this is back in like 2008, 9 again. There
Yep.
were like very few companies, or sorry, investment firms that would take this approach, this model of incubating the companies.
Mm-hmm.
Ultimately, what a lot of VCs are trying to do is trying to maximize, especially the early stage one, not growth investors, but the early stage, true early stage VCs, they're trying to maximize the value of every dollar. And so
Yep.
the way you do that, since a dollar is a dollar, is you want to invest as early as possible, right? But that's really hard to do for lots of reasons.
Mm-hmm.
So what some of them do and now it's really common, and lots of the biggest venture firms in the world do this as like a whole practice group, is they will just incubate ideas themselves. So it's not about finding the idea, they just form the idea themselves, and they can have total control over like the price of the, the valuation, how much money they invest, if they let other people co-invest. It's a super smart strategy. And
Hmm.
so Wasabi was really one of the first. That's actually where I started my first business,
Hmm.
in software. Fast forward a couple of years, the one that I'm talking about was called HVF Labs,
Yeah.
and yeah, so that's based here in San Francisco.
I'd be remiss not to mention as well, and I'm just noticing it here now that ApplyKit was acquired by Noodle Education. So that's always nice when you get a good landing spot, so to speak, or
That was a great a great experience, and
mm,
Noodle was also really interesting company, like founded by the former founder of the Princeton Review, who then also started 2U. And
mm,
ApplyKit was the company. Basically, my first idea was how can we use, I'm in Boston at the time, and so obviously this is all around me. How can we use software and data to better match students to the colleges that they should go to? Because
mm,
it's a really big financial decision. But most people just, I don't want to say they phone it in, but they're just like, yeah, like I want to go to a couple of these colleges. My dad went to this one. My buddy's going to this one. I would be okay if I go to this one.
right.
And we were like, how can you try to make that a little bit more precise? And
Yeah.
Noodle as a company is just focused on education more broadly. And so, yeah, then when I went there, I helped them build a different sort of platform that they were working on. And so, all part of the journey, man.
Yeah, for sure. You sound your description of how people apply to college or is exactly like mine, frankly. I just sort
Like,
of phoned in a little bit, knew somebody who was applying to Stonehill. I was like, all right, you know what? That sounds like a pretty good school. Hopefully, I can get in. Hopefully, they'll let me in, and they did. So let's jump a little bit up to Rainbow. And the big question I have with Rainbow is, um, I know obviously you had a history, in insurance. You're interested in insurance. Maybe you can talk a little bit about that, but why this particular business model? And for people who obviously who haven't looked at your website or anything, just tell us a little bit about Rainbow, the business model, all that stuff.
yeah, so Rainbow is an underwriting company, meaning that we have an insurance product that we've developed that focuses on small businesses. Underwriting company that focuses on small businesses.
Hmm.
The differentiators of Rainbow are that we build and use software basically in every part of how we deliver value into the market. We marry that with experienced domain experts, so underwriters, customer service, sales, and marketing. Most of the folks on the business side come from insurance, uh, and we try to take the third thing is that we try to take a very customer centric approach to different industry segments that we're focusing on. Um, So if you look at like insurance in general, there are really only like a handful of personas that underpin like a $1 trillion industry. And that is like you're either an underwriter, which is like where the carriers come in, you're either going to be a broker or an agent, which is where big like local independent agents like in the town you live or big corporate brokerages, or it's going to be something claims related, sort of like the management and servicing of claims. Of course, that's a generalization, but like the biggest buckets usually are those three.
Hmm.
So my last company was a brokerage, the company that I started the incubator called PathPoint.
Hmm.
That's a brokerage that's still growing and doing really well as a company, has a great leadership team, and they're doing awesome.
Hmm.
And but they don't really have any role in modifying the insurance products that are sold through the platform. They just facilitate the sale of the products of other carriers and sort of grass is always greener type thing. I was always, when I was the founder and CEO or co-founder and CEO of that company, I was like interacting with a lot of folks and feeling like, man, I wish we could have more of an impact on like the insurance products themselves. But the truth is that doing that requires you to have a whole different set of people. It is really like a whole different company. That's why these two things are generally done separately.
Hmm.
Um, so with Rainbow, we really wanted to focus on small commercial because it's a really big industry. So these are like businesses in the town that you live in. Basically, 100% of them are required to have insurance. They can't get commercial leases. A lot of them can't get bank loans or lines of credit. They can't do that stuff if they can't demonstrate insurance. So basically, every business needs insurance.
Hmm.
But the way that they get insurance is still, to us, in our opinion, a little inefficient, and it could like benefit from being modernized. A lot of the biggest carriers, Travelers, Hartford, State Farm, these companies have been around for over 100 years. And there have not really been lots of like innovative companies coming in and trying to shake things up. And that's ultimately what we're doing.
What's the business model? So you're sitting in the middle, I'm assuming, between the small commercial businesses and the insurers, right? And the agencies. So talk to me about that. Where does the money come from?
So we basically, you hit the nail on the head. We sit between distribution and reinsurance. So
Okay. Yep.
reinsurance, which is insurance for an insurance company, basically gives us the authority to sell our rainbow insurance product. And in exchange for that, we don't keep any of the risk on our balance sheet. All of the risk goes to our reinsurers. And what that means is that if our policyholders have claims, it's the reinsurers that pay those claims.
Hmm.
And in exchange for giving them all this risk, because reinsurers, the way they make money is by getting that risk. In return for doing that, they pay us a commission.
Hmm.
So that's how we generate revenue. And then from that commission, we pay the brokers, sort of like that's like our customer acquisition cost effectively.
Hmm.
And then there's like our operating expense, and the balance is like what our profitability would be as a business.
Repeat that again. So you pay the brokers to because the brokers are the entities, so to speak, to help you find and attract the reassurers. Is that correct? Reinsurance.
Yeah, yeah. So basically, if you're an agent and you hear about Rainbow, and like you
Hmm.
said, we focus on insuring restaurants. I can talk about kind of why we. But if you come to us and you say, "Hey, Rainbow, I want to insure a restaurant with you. I have a restaurant owner. His name is Jay. He needs insurance for his restaurant." We say, "Okay, great. Here's what it will cost to buy our policy. Here's what the premium is. On that premium, agent, we're going to pay you X points of commission. And we're going to pay that to you every year, by the way. That's why insurance is a great business because it's
Hmm.
very recurring. We're going to pay you
Hmm.
that every year." And the agent says, "Okay, great. I'm going to sell that policy. You're going to owe me that commission." And then we take the total premium net of the commission and we transfer it to the reinsurers. And in exchange for sending them that business, the reinsurers pay us a commission as well for basically sourcing the business for them.
Got it. I don't know if you noticed, but I'm in the process, so to speak, of turning my own network into a marketplace, right? Where it's going to make it easier for startup companies to meet and hire go to market leaders, whether it be fractional, advisory, and maybe full time as well. And so I've been fascinated with this marketplace model for a number of different reasons. But what you're describing here to me sounds a bit like that but with more, I guess, I don't know, human interaction, so to speak, if you will, which is fast. And one of the questions I have as I'm thinking about and working on my marketplace is, there's the supply side and then there's the demand side. And if one of the words that I've learned is liquidity, right? In other words, in liquidity in a marketplace model is that both sides find each other. Successfully, of course. When you've been building Rainbow, what did you start with first? What did you put all of your focus on in order to build it up, and where did those first sort of either on the supply or demand side come from?
So we had to start with, depending on how you define supply or demand in our world, the first thing we had to do was build something to sell to the agents or something for the agents to sell on our behalf.
Yeah. Okay.
So we built our insurance product. We work with actuaries who developed, a valid insurance product. Once we had that product, we had to go get reinsurance for it because you can't sell a product that doesn't have reinsurance. Because that's like the solvency and the security that ultimately the policyholder needs. Then we had to go get approval from regulators because this is a very regulated industry. And then once we had the reinsurance and the regulatory blessing, it all comes down to two things: selling the product as cost effectively as possible, right? And so the way we sell the product is we prospect and attract agents to us who ask to get an appointment to sell our product on our behalf. And then the other part, so we find distribution. The other part is that you want to use human oversight to make sure that you're selecting high quality business and you're not
Mhm.
just getting a bunch of like poor quality risks. And that's like the name of the game. It's pretty straightforward. It's not easy and it's constantly changing, but the mechanics are actually pretty simple.
Why restaurants?
So if you look at small commercial insurance, I'm gonna give you a bit of a long-winded answer, but I'll come to why restaurants.
Sure.
If you look at small commercial insurance, no, sorry, I'll take an even bigger step back. If you look at property and casualty insurance, there's basically two big branches: personal lines and commercial lines. In personal lines, you have homeowners and auto as the two big categories. On the commercial side, you have small commercial, middle market, and large commercial. So large commercial is if you want to insure the Prudential Tower. That's like a very large placement. Many carriers are going to be involved as a whole thing. Middle market is going to be more of if you wanted to insure like an office park somewhere on Route 128. And small commercial would be if you want to insure the small businesses in the town that you live in: restaurants, laundromats, gyms, whatever, stuff like that. In the United States, personal lines insurance, homeowners, and auto is far more digitized than commercial lines insurance. And the reason is because those classes are much more homogeneous. There's not that many kinds of homes. There's not that many types of cars.
Hmm.
But small commercial, the risk of a doctor's office is very different from a consultant, is very different from a restaurant, is very different from a gas station. And so that kind of one size fit all approach to digitizing small commercial doesn't really work well. No one's been able to really crack that.
Hmm.
Some companies have tried to do it by taking a very broad approach, sort of like mile wide but inch deep in terms of the insurance product. Our approach was to say, okay, like anything, if you look at small commercial, there's going to be sort of like 80-20, right? There's going to be some really big categories that are more homogeneous. And then there's going to be this long tail of much more esoteric niche classes. So as you look at those larger homogeneous categories, restaurants is one of the biggest categories in the country. About 100% of restaurants have insurance. Restaurants have been very distressed as an industry in the last 5 to 6 years, in particular because of COVID. And because they've been distressed, it's very hard for them to get insurance. But again, 100% of them need it. And
Hmm.
so that created we observed that there was like this dislocation in the marketplace.
Hmm.
Then, as we dug a little bit deeper, we were like, okay, how do carriers feel about insuring restaurants? What we learned is that most carriers don't really like to insure restaurants. And the reason is because they feel like the nature of the risk of a restaurant is always evolving. And the way that they, as carriers, underwrite these businesses is very high touch, very human based. And so
Hmm.
it's another way of saying it's expensive for the carrier.
Hmm.
And so to constantly monitor what's going on in a restaurant is just not possible for a team of humans, but it's a perfect fit for good algorithms and data pipelines that we could develop. So every restaurant that gets submitted to us, for example, we're scraping all kinds of online reviews. We're using all kinds of very industry specific data to give us a much clearer picture of the risk. And then from the time we sell the policy to when it renews 1 year later, we're constantly monitoring in the background. Our software is monitoring the health of those businesses. So it just gives us much more confidence and precision with underwriting. And this approach, we think, applies to many other segments within small commercial. And so the vision here, now that we have this online platform, now that we work with several thousand agents around the country, is to kind of just keep making other programs available to them as we grow the overall business.
Wow, that sounds exciting. I'm getting excited about insurance just thinking about that. So you raised money. I think you raised what, $12 million back in February. Is that right? Of this year? Tell me about that. Obviously, well, maybe not obviously, because it's not like I've gone through it. So I guess I'll ask you: is raising money different, more challenging now in 2024 than it was, say, 3 years ago? And what were investors looking for to hear from you? What kind of traction did they need to see? What questions were being asked? Just overall, what was the process like? So your opinion on where things are now versus where they were a few years ago, and what your experience was raising money.
It's definitely a lot harder to raise money now, no question.
Mm,
I think that it is especially harder for certain categories of startups, right? Like right now, there's tremendous buzz around AI. And so if you're a true AI company, the thing is that there's not necessarily less money to be invested. It's
mm,
just that investors are being much more selective and they have like, because of all the change in interest rates, they just have to be much more disciplined about what they invest in.
mm,
So AI is sort of like the obvious example that like everyone's going nuts for. Some categories like healthcare, like you're always going to have gone to a certain breed of investor that specializes in healthcare. So it's harder for me to comment on how hard that is. Again, at the end of the day, interest rates matter to those sort of like fund economics. And so I'm sure there's like some level of challenge. Um, but if you think about all those other startups, including insurtechs or fintech or anything tech, right? Like when we went through this huge boom of let's just put software on everything, I think that market, which is like sort of the big one, has really gone through a very big correction, and we're
mm,
still kind of going through that.
mm,
I think in terms of what investors are looking for and what they look for in us, is they look for the team, number one, because of the stage that we're at, right? The stage is going to depend. So for the early stages, they're going to look at the team first and foremost. Some good investors will only bet on the team. They're going to almost not even pay attention to what your idea is. Because, like I said before, they know your idea is going to evolve. What's much more
mm,
important is who is the person in charge who's going to sort of navigate that process. I think they want to make sure that you're going after a big enough opportunity because the returns that they expect uh, have evolved, right? Like they need a certain type of return. And then the third is just sort of like it's very hard to say, but it's just sort of like, well, the third would be like what's the initial traction, again, depending on the stage, and how confident do they feel in that traction being a barometer for future ongoing success. Not easy to do, but like, those are kind of the three big things. And then there's this X factor of like, is there chemistry between you as a founder and what you're focused on and those investors?
mm,
When I have raised money for a few different companies now, and I would say that early on, especially the first couple times, I was like so desperate to prove to myself that I could do it that I would be willing to basically take money from anyone. And what
mm,
I would advise entrepreneurs to do is everyone's money is green, right? So at the end of the day, it's not necessarily their money that's going to make a difference for you. What's almost always going to be more important is that an investor that you feel comfortable with? Are they going to be helpful to you when you need to have tough convos? Um, what are their expectations in terms of how you're going to interact with them? A lot of this
mm,
stuff probably sounds really obvious, but the thing about fundraising is that it's such like a vulnerable process to go through. You have to really like expose yourself and be willing to sort of be nice to people who you don't necessarily like, and you have to be willing to go after a firm that you always dreamed of getting investment from, and the person who they sort of stick on your team is not the person that you hoped to get.
mm,
Those are all realities that nobody really thinks about or talks about, but it's
mm.
very real. And so that connection, that personal gelling, I think is the thing that I've learned is kind of most important.
All right, let's see. Where do I want to go with this next question? Because I know we're running out of time. We're getting tight. The you mentioned expectations have certainly changed, I guess, if you will, in terms of what they're looking to return. Tell me the multiple, I guess, if you will, as a proxy of how different the expectations are. I mean, and I don't mean multiple in terms of like, I don't know, sense of dollar amounts, but like by a factor of how much, I guess, if you will, are they expecting a return as opposed to where they were before?
I just, again, I think it really depends on the fund. Generally speaking, the way the economics work is that depending on the size of the fund, most investors are looking for a certain ownership threshold, right? And just use round numbers. Let's say that it's at when they enter the company, meaning when they first invest, they want to own at least 10% of the
Mm-hmm.
company. And the reason they want to own at least 10% is because they know that if the business is going to have to raise more money, they're going to either get diluted or have to keep taking their pro rata to maintain their ownership or increase their ownership, with the ultimate outcome of they're going to ask you, how big a company do you think this could be? And if you say to them, okay, I think it could be worth $1 billion, and they own 10%, and that means that their stake could be worth, if they maintain it, $100 million.
Mm-hmm.
If they're investing enough money to own 10% of a company that is worth $500 million, right? That's not going to be enough ownership for most investors to get that, to only have $1 billion outcome. They're going to want to believe that it can be worth $5 billion or more than that.
Mm-hmm.
And so they're going to ask you, like, well, who would buy you? What other examples of acquisitions or outcomes could you point me to demonstrate that, like, that's what's going to happen? Um, those things really matter. So what good investors will do is they'll say, okay, I'll invest, but I'm going to invest at a lower valuation. You can kind of take it or leave it. And for some people, depending on where you're at in your own process and what other competing offers you have, maybe you want to go with that. Maybe you like the person you're talking to so much that it's worth it to you to take a little bit more dilution because you think that the upside is worth it. I think those are like very hard things to think through when you're not in the moment. And then when you're in the moment, it's kind of like it's hard to think through it again because you're just nervous and there's all kinds of things going on and you've worked so hard. And these things are just very fragile. Like you'll get a relationship to the right point and these things fall apart all the time. That's another thing nobody wants to talk about, but it's really heartbreaking for the founder. And I just encourage everyone to just really not take those things personally because it's not personal. Um, but you sort of have to desensitize yourself. Otherwise, you're just going to be on a constant roller coaster, and it's not going to feel fun. So you have to realize that at the end of the day, they have to make money, right? Like they're investors, they have to make money. They're never going to know your business in almost all cases as well as you do. They're going to try their best to be helpful, but who knows how helpful they could be. And by the way, life gets in the way, man. Let's say you find your dream partner, they invest, and a year later, 2 months later, a bigger firm comes and says, I'm going to double your salary. Do you want to come work? I'll give you a bigger checkbook to work with. That person's going to take that offer, of course. And
Right.
now you get stuck with someone else who you don't like as much. And you're like, man, I never even would have done this deal. You just have to be comfortable with that being the reality. Like that's life. And so
Yeah.
so
Interesting.
that's why it's just important to just sort of get what you need and then allow yourself to just focus on building a really good business because that's what's going to keep you safe as a founder.
Yeah, that's amazing. That's great insight. All right. I would normally get into rapid fire five, but we're going to skip that today because I know that time is of the essence. Because I need to ask, I have so many more questions, but I guess I'll ask this question next, given what you just said, which is, what did you tell them how big the opportunity was when you were raising money?
So first thing that I'll say is that almost all of our investors I have had in Rainbow, I've had a multi-year relationship with. Like I know the people at these funds, I know the funds. Several of the investors have been investors in me in my previous company. And so they really knew me and I really knew them beyond just sort of like being friendly at like networking events. Like
Mm-hmm.
we've been in the trenches together. Basically, we believe that the business that we're building could easily be worth, and depending on how you measure it, worth several $1 billion in like a base case. So not the absolute best case outcome. And the reason that is because insurance is just so big. The industry itself moves so slowly that if you can demonstrate that you can move quickly and get traction, that is like incredibly valuable to the industry. And the industry, the companies that will buy you, they have really deep pockets. The number one thing they struggle with is building software and technology. And then the other thing that they struggle with is retaining good talent. And one of the reasons is because a lot of talented young people, the leaders of tomorrow, don't want to work at companies where people still send things in via fax, right?
Hmm.
Like that sounds ridiculous, but it's like very true. And so, you if your value prop is such that you can basically demonstrate to a company that what you're doing is clearly the future, that's kind of like, as a general rule, I like to think of like that's a safe place to be in terms of the vision and the value of what you can create for them.
It's interesting. I was on the phone with somebody the other, I think it was yesterday or the day before, somebody from the government, I believe, and they said, "Do you want us to send you a fax?" I
Yeah.
said, "No, I don't want you to send me a fax. You can tell it to me over the phone. You can email
Yeah.
it to me. I'm not. This isn't. I don't have a fax." Very interesting. Wow, so fascinating. Before we hit record, I asked you that we may have to do a part two. I hope you'll take me up on it because I still have more questions to ask and would love to still go back at some point. So
I'd
you
love
said
to.
yes. Okay, good. I want to make sure I have you on record of saying yes.
Yes.
Uh, for sure. Let me end with this. How can folks reach out to you to thank you for doing this? Ask you questions that maybe I haven't asked. Maybe they're a small business owner and maybe they need help through Rainbow. What's the best way to get in touch with you?
I try to be really good about watching LinkedIn. So maybe when you share the podcast, if you can link to me
Hmm.
on the post,
Hmm.
anyone can feel free to reach out to me, add me, message me. I really do try my best to get back to everyone. I've definitely had lots of really thoughtful people help me in my career, including you, Jay. And I always try to pay it forward. So if there's anything ever I can do to be helpful to folks, I'm always happy to try my best.
And don't forget to put the goats of growth in the subject line or somewhere in that email or message so that he pays extra special attention to it.
Absolutely.
Bobby, I'm sorry, I feel like I need to ask this. How do you pronounce your last name? I keep saying Touran, but is that it or is it?
That's right, Touran.
Oh, okay. Bobby Touran, thank you for doing the goats of growth. Always good to see you.
Likewise, Jay. Thanks for having me.
Goodbye, everybody. Don't forget to subscribe, rate and review, and tell your friends, colleagues, and all that wonderful stuff about this podcast so I can keep delivering great episodes. Goodbye, everybody.